Welcome to the Trading Flow of Profits, where traditional knowledge is equipped with real trading education. So today, let's dive into the prices. So gold is trading at 4,018, and when you look at Bitcoin, is trading around $113,000. So today, I have my special guest. In extension to digital currencies, I have the general manager from Binance South Africa. He's been quite incredible in this field. He has over 2 decades in traditional finance as HSBC, and he's been started off from the trading analyst to the head of banking. So he has quite incredible experience. Hello. How are you, Mr. Hannes?
Well, you folks, and delighted to be here. Delighted to be here. Really looking forward to this.
Okay, let's start off with your journey. So we heard that you had started from HSBC, from the trading analyst, which is a role that requires more risk adverse, and you went to what you are currently doing, Binance general manager. Can you tell us more about that?
Yeah, that specific analyst role was credit analyst, and it's quite an important role in a banking environment, because that's the person who reports to the head of credit, the head of risk, and we analyze at that stage, well, still today, what is your two things, your willingness and your ability to repay someone if you borrow money. So in banking terms, obviously very important. It's a great place to start in banking. This goes back to 2000, 1999, 2000, and if you want to learn the ins and outs of banking, that's for me one of the best places to start, because banks are about lending money.
Yes.
And if you understand the risk factors between a good payer and a bad payer, that's a great place to start. So, yes, I mean, if you're in a risk department, you're probably, I won't say you're risk averse, but you're probably more risk conscious.
Yes.
From there, I went into more, it's not really a sales role, but it's a banker role where you need to originate business, you need to put loans on the book. So you need to have that credit risk background. But once you've got that, it's good to take that into an asset generation role where we will basically generate loans. And it's been a great journey. I was there for 22 years. In the end, HSBC recalibrated their strategy. It is ultimately the Hong Kong Shanghai Banking Corporation, and at that stage, I think the group CEO felt he wants to focus more on that Asia pivot. If you look at where Asia is in the global economy, the HSBC roots, the HSBC network, that was a good call. The local business was sold to First Rand Bank, which I think was also a good transaction. They gained very good clients because HSBC's multinational clients are of a very high quality, and they get a very good book, and HSBC managed to exit the market very responsibly. So a good exit for them. Then to crypto. I mean, I've been interested in crypto since 2017. That was, I need to think now, the third bull run. And I realized, what is this thing? Because all of a sudden, a lot of people pay attention to it, and lots of people in banking tell you, well, don't do it. And I don't hear don't very well, so I just said do it. So I started looking at this thing, and I realized, okay, but this is like money, but it's not money. People call it funny money, but no one's laughing. So what's going on here? There's an article this week in the Financial Times where they again talk about funny money, but I'm like, no one's laughing. So lots of people crying from time to time. No one's laughing. So I looked into this, and you start doing your research, and you very soon end up with Satoshi Nakamoto's white paper. And I read this and I realize, okay, listen, this is a very coding based, but be very mathematical.
Yes.
So this doesn't look like someone just sucked it out of his thumb. It looks like there's a lot of thought that's gone into this. And I looked at it and I looked at it and I looked at it and I realized, but A, it's really well formulated. B, there's no Bitcoin corporation.
Yes.
I mean, like Binance is a corporation, we're multinational. Ethereum is a foundation, they've got an organization behind them. This is like a decentralized network that once it got going, there's no CEO, there's no governor of the Bitcoin central bank, although Michael Saylor probably thinks he's that governor. But there's, it's this system, this thing that runs by itself.
Yes.
And the halvings come and go, the mining come and go, and the way people are incentivized, there's no central hand hanging over it. That fascinated me. And then the Binance role came up, and I'm like, no, hang on, I want to do this. You know? So went into that. As Binance, we're the world's biggest centralized exchange. We've got more than half of the world's blockchain cryptocurrency flows. So we do cover a very large part of the market. The company grew very rapidly initially. It's had its ups and downs. I think everybody's aware of the founders' US issues. We worked through that. So we then started what we called Binance 2.0, and we need to make this more compliant. And I think everybody had to sit down and think, well, we can carry on like we carry on, and the exchange will probably disappear, or we can throw a lot of regulatory and compliance resource at this massive animal at that stage, and just make it a strategic strength of you. So you can be the compliant exchange that's got the most licenses, the best reg tech. People forget fintechs can code, regulation, and compliance as well. And Binance has done a tremendous job of that. So all the stuff that the regulators want, and a lot of the traditional finance institutions put human bodies into, we just code. We just code for the stuff. So suspicious activity reports is something the system picks up. KYC is all done via APIs with a direct link to the Department of Home Affairs. So to see some of that stuff work is really tremendous. And then the platform itself, if you look at our liquidity, the size of our liquidity pools for Bitcoin, Tether, it's just multiples of what anybody else has got. So why is that good? You get a good bid offer spread. You're not bidding on an illiquid pair and you're the only guy putting up his hand, I want to buy something today. So there's a lot of depth there. If you look at how that trading pair moves on your app, on your web app, there's a lot of depth there, and it works very well. So and there's times when it's really tough. Not everybody likes us, but we pull through. I think with CZ stepping away, Richard Teng took over. He did a tremendous job of just putting Binance on that straight and narrow and make sure we do the right thing every day. And that's been a great journey. We've not lost the market share we would lose. I see competitors cutting corners where we don't. Ultimately, those things catch up with you, and it builds. It's like it's like an immune system. If you do it the right way, the organism just becomes stronger and stronger. And we've done some interesting things in South Africa, and looking forward to the rest of this year, next year.
So you're mentioning that at around 2017, that's when your interest sparked. So I'm more interested in how did you tend to understand that these are digital assets? Because you come from a more digital banking background, more traditional. So going there and telling people, let's say you're telling your mother or your wife that, hey, I'm going to do these digital assets. This is the thing. This is Binance. These guys have around 500 or different crypto assets. How did you never get around that?
I think there's a bit of selling involved. My wife's very open-minded, so she bought it very quickly, and to date I haven't disappointed. My brother took a bit more convincing. My brother's in tech, and he phoned my mom and says, this is the money of the future, and she's like, okay, I get it. And so we got there in the end. I think it's always good, a lot of people say things, but you need to see what people do. And I started watching the settlement layers of Bitcoin initially, and then some of the other protocols we have not only proof of work, but proof of stake, and also proof of history, like in the case of Solana. And it just gets faster and faster. Now, I was kind of at the back end of when the JSE Securities Exchange built their settlement system. And at that stage, to go from a paper-based system where you have a bunch of guys on motorbikes exchanging share certificates every day, up to a point where it's now settling electronically, but it still took anywhere from T+2 to T+5. Guys, it's 5 days where you're giving your money and you only get your share certificate 5 days later. I'm like, what happens in that 5 days? What if a meteor hits us? We've got bigger problems anyway. And we because HSBC had a securities arm, and this is part of credit risk and operational risk, you study these things. And then you also look at Bitcoin, like any good scientific process, you always need to have a one hypothesis and a zero hypothesis. You need to have the thing you're looking at, and you need to have something that's the contrast of that, your zero hypothesis, so you can contrast something. And I said, like, well, Bitcoin settles in 10 minutes. I'm like, well, that's fast. And I look at some of the others, they settle in 10 seconds. Because it's just a streamlined form of the proof of work protocol. And then you realize, but hang on, you've got something, if Bitcoin is the penny, the blockchain is the jukebox. So Bitcoin is just what you put into the jukebox and it works, So if you can tokenize a coin, you can tokenize anything. You can say, well, a lot of people do it, this laptop, a battery pack, this coffee, whatever, you can tokenize it, and that's how you assign rights to something. Now, you can do that, you can assign the same thing to shares. So if you can do it to shares, you can trade shares on the same basis. You can tokenize anything. And on that big, then it becomes really interesting. You realize that you see people like, there's a company who does X shares. All they do is they take, say, 10,000 NVIDIA shares, they put it in escrow with a broker, which means it's locked into that account. They issue 10,000 tokens against it, and now they trade the token. The thing is, what's become better now, what's improved, is that your shares over a weekend sits in that account, no one can trade them. But the tokens trade 24/7. And they don't take T+5 to settle, they settle in 5 minutes, for instance. Guys, that's a big step forward.
Yes.
That's a big step forward. So I think it's a case of we're going to start with what X shares has done, and they've put in escrow some shares, but I think it's just going to get bigger and bigger. And I think this is where software eats TradFi. I think ultimately, for me, it makes sense to trade anything that way. It will take a lot of convincing to get people there, but yeah.
Since you're already touching on that, Binance already offers staking. So can you touch more on that?
So staking, people often confuse it with deposit making at a bank. So you take your money, you give it to the banks, and heaven knows these days you get about 4%.
Yes.
But that's interest because what does the bank do? They take your money, they lend it out at 7%, they give you 4%, they take a margin of 300 basis points. Crypto is different because that staking is actually where you tie your tokens to the blockchain, and the blockchain uses it to turn transactions. It becomes like the currency of that blockchain. And every time they make a trade, so let's say Binance does a trade, our standard flat rate is 0.1%, but it's 0.1% of every trade, but it gets paid in BNB. So you give us your BNB, you basically put money into that pot that can be used for that. And then we pay you part of that 0.1%, we pay you back. So it's more of a working capital fee than it is an interest rate fee. But there is quite a difference,
There's a huge difference. So can you walk us through your everyday life as the general manager for Binance?
There's no set day, no set diary. Some days are easier than others. And then some days, there's a lot of, unfortunately, still a lot of scams in crypto. And one of those come along and you just lose 2 weeks. Because this needs to be sorted out, and we take these things very seriously, and we want to make sure, A, that our network is protected, but B, more important, that the users are protected, because for us, the users are everything, the community is everything, and you protect the users, you protect your business. It's as simple as that. Raymond Ackerman of Pick n Pay always said the customer is king. For us, the user is definitely king, but not only the user, that community base. That's what we need to look after. And there's I'm digressing slightly, but looking after that user is what determines every day. I mean, there's two things it starts in telecommunications, where there's something called Metcalfe's law, which is the law of networking. If, let's say, there's 4 of us in this room, I give you my number, you give your number, it's not about the nodes, you me being a node, it's about the connection. So between us is one connection, another connection. That's Metcalfe's law of networking. And this is how network adoptions work. So if more and more people get Bitcoin, that's how that curve goes up. And it started with telephones. It comes from the telecommunication industry, where if you have a phone, your mom has a phone, your nan has a phone, there's 3 connections. And the more people get phones, the more people speak to each other, the more the network grows. Now from that is a new law called Reed's law. Reed's law is about Metcalfe's law, but if you build that network bigger and bigger and bigger, all of a sudden people start forming communities. Think about where you live. People form a community. Think about crypto. You form a community around something. It's almost like in some parts of physical science, they talk about clunking, where certain molecules stick together. Humans do the same thing. We form communities around culture, around sport, around politics, around whatever, it's mutual interest.
Yes.
And that's Reed's law. The more Metcalfe's law grow, the more Reed's law form these communities. And what we've got in Binance is a very strong community that we reach out through Telegram groups, WhatsApp groups, physical meetups, etc. And that's very useful because if something goes wrong, the community is the first one to tell you.
Oh.
If you think about politics as well, I mean, something goes wrong, the community normally tells the member of parliament. It's the same type of concept where the community will tell you there's a problem. You don't want to hear it in the newspaper. The community speaks up long before it gets to the newspaper and the newswire. So it's a very efficient way to stay in contact with your user group and give them a channel, an open channel to use. So for us, a lot of work goes into that. A lot of work goes into our regulatory stuff, our licensing. And then one of our biggest verticals will always be marketing. In any crypto firm, marketing is extremely important. And yeah, I think we do a great job with that. So it depends day to day, it depends which of these ones scream the loudest,
It depends. So can you tell me more about, I want to know more about Binance. Like, what's the future? What's the vision for Binance now? We are beginning to see that the regulations are shifting. So what's the future for Binance?
So for us, it's about the freedom of money. We're not here to compete with the banks head on. That's not our game. We're here to fill the gaps. It's a bit like, there's a saying that water fills, or water finds a level somewhere. So wherever there's a gap in the market where, especially in Africa, Africans don't have bank accounts.
Yes.
So you're unable to transact. Crypto gives you that. Big parts of Tanzania, Ethiopia, Kenya, in West Africa, the likes of Nigeria, is prime examples of where unfortunately the system simply doesn't serve the people, and people start trading in stablecoins on peer-to-peer, Binance Pay, etc. And all of a sudden you have a quasi-dollarized economy. So that's very important for us to make sure that we fill those gaps where people are disenfranchised. We can give them the ability to A, store value, B, grow value, and C, or emit value. So you want to buy something. Something we focused on this year was our Binance Pay product. So if you go into any bootlegger coffee or any store that's got a Zapper QR code, you can simply open your Binance app, tap on the QR code icon, and then the money that you put into your funding wallet, you can then spend on coffee, on, well, basically anything that's got a Zapper logo to it. And that starts to work really well because we've done this with in partnership with a company called Money Badger, and they are very good in terms of getting to the really basic stuff of crypto, making sure that whenever that tap happens, there's a transaction in the background that sells your crypto for rands. The merchant gets rand because they don't want crypto yet, they get rand. You spend your crypto in the order that you want to spend it. So you're not going to spend your Bitcoin. Let's say you're a Bitcoin investor, you see Bitcoin as your safe haven asset. You don't spend your Bitcoin. What you do is you'll take part of your Bitcoin, sell it for Tether, or you'll sell it for BNB, or whatever your preference is. You take those proceeds, you put it in your funding wallet. So it's not a case of, you drain your wallet and you go into your Bitcoin reserve. You spend only the crypto that you put aside for this. So there's a very clear segregation of that. So that product we've done really well this year, and I want to continue driving that next year. We want to build what we call our fiat on-ramp, so your rand to crypto network where someone puts money in a bank account and we allocate rand to their Bitcoin after their Binance account, and you can then convert that through spot trading, through convert, into whichever crypto we have and you want to trade.
Sorry to cut you there. You're talking about it being on your phone, like your bank account, and you can...
So not your bank account, but you put it into a nominated bank account of ours through the tech, and we're working on that tech bridge. So at the moment we work with Stitch Money, where their tech basically puts a beneficiary in your bank account. And then if you pay money over with that beneficiary, it reflects on your Binance account. So they say you take $1,000, put $1,000 into your Binance account. They've got a fee, but let's say less the fee, you get $980. You see 980 rands in your Binance account. Now you can trade. Now you can buy Bitcoin, you can buy Tether, you can buy BNB. We obviously give you a good deal on BNB because that's our native coin. But once you got BNB, you can now trade almost any pair. So if you go to coinmarketcap.com and you look at that top 20 list, we will cover all of them. They're all on there. You can trade them. And that's the type of stuff. So just easier, less friction on ramps into crypto, but it's also safe. We want to make sure it's safe. We want to make sure it's safe from fraudsters. Unfortunately, and this is a very sincere message to all your viewers, is there's a lot of people pretending to be from Binance.
Yes.
We don't reach out to people unless I get a very distressed call that someone stole my money. I will never reach out to you first and say, hey, I've got this great deal for you on Binance. That's not what we do. So if someone appears in your DMs and say, hey, I'm from Binance, I've got a great deal, be very, very suspicious. Guys, we've got a web page on that topic that you can verify an email address, a website, promotion, a couple of things. You can verify our social media accounts. If you just Google Binance verify, you authenticate, you'll get that very quickly. So just make sure, you're speaking to someone that's actually from Binance. I think a lot of us don't always check our email addresses.
You don't. A lot of people don't.
And you just get the special. I mean, I don't know how it works, but my cell phone contract's up for renewal shortly, and I got let me not say which provider it is, but I got an email from the provider saying, hey, you do, click on this button and we get a phone to you. I'm like, this is very suspicious. I click on the email address, it's in no way related to that service provider's email. So it's always x.co.za, be that Vodacom, MTN or Cell C, and it's got no bearing on that whatsoever, but it's so cleverly done. People catch you so easily,
They can manipulate it nowadays. They have this
So
good
easily.
input
Yes.
logos and stuff.
And you can generate all the stuff
Yes.
with AI. You can say, make it look exactly like one of those three, and it's just, so be very careful, but use we got it, and I think most good tech companies got a verified page where you can verify my email address, you can verify the binance.com/ENZA homepage for South Africa, you can verify that stuff. And please, everybody who listens to this, please do that first. If you've got any doubt, trust your gut, trust your intuition. If something doesn't feel right, just check again, Trust but verify. Just check it, everything's good, and maybe start with a smaller bit of money, withdraw it. We didn't have minimum amounts, so you put a bit of money into Binance, BNB coin, you sell it back into rands, take it out. That's what we're here for. We don't want to say to you, well, your money's locked up now, you can only get it. No. Take it in, take it out. I actually encourage people to do that. Take it on, take it off. Make sure you are happy that it works. And this is one of the key tenets of a lot of these scams, is your money's there and they generate these false statements, and all of a sudden you see, you're doing so well. It's okay, but just give me like $10. No, it's all locked up. Our stuff doesn't work like that. So even our earned products you can redeem early. So make sure, guys, you've always got your exits. Like anything in life, know what your exit is. And our exits are clear. You can exit in most cases almost immediately. So that's, I think, quite important.
So in terms of, let's say I'm somebody who's new into crypto and I've just listened to this podcast, I'm like, this is fascinating, I want to get started. So how do you get even started at Binance?
I would strongly encourage you to go to our Binance Academy page first.
Yes.
Guys, this is what we've got it for. Use the Binance Academy page. We've covered almost everything. Start with, we've got an article, what is Bitcoin? In layman's term. And it's not a case of saying to people, we think you're stupid. It's a case of we all start somewhere. I started with that article. What is it in layman's term? And if you get it in layman's term, you can then expand your knowledge into the more technical aspects. But make sure you understand the layman's explanation of it. What is Binance? What is BNB coin? We cover all those things. And it's free. You don't need to be a user. You can just go onto academy.binance.com. You can Google Binance Academy. It's all there. It's a free resource. We want people to be as educated as possible. And then you can start, once you've got a bit of knowledge, okay, well, hang on, I've got this BNB coin. You've got a friend that's in crypto, say, hey, I'm going to send $100 to my account. I'm going to buy BNB. I'm going to send it to you. Just send it back to me. I want to see how the transaction works. Do that type of stuff. Experiment, and see how it works. So do low risk, low amount experimental education to see how it works, because that's what we set it up for. And then, build trust, see how it works, build yourself a portfolio over time. I would say if you're a bit of a tech geek, go read the white papers, read the Bitcoin white paper, read the Binance white papers on our website. Most of these white papers are easily accessible. Just, it tells you what that chain does. And if you can't, I always say, if I can't explain it to my golden retriever, then I don't understand. You know, it's one of those things. If you can't explain it to your golden retriever, if the dog does this, you're doing it wrong. No, if you can't explain it in layman's terms, you don't understand it yourself. I think that was one of Albert Einstein's famous sayings. If you can't explain it to a layman, you don't understand complex issues yourself. So, read it back to yourself. So what is it? Bitcoin is a permissionless network based on a proof of work blockchain. What does it mean? Explain it to yourself and then do a transaction. Remember, in Bitcoin you can do smaller amounts. You don't need to buy a Bitcoin. A Bitcoin is almost $2 million.
2 million, yes.
So you can buy 20 rands worth of Bitcoin. The commissions, we keep the commissions the same. So it's low. We want volume. We don't necessarily want high commissions. I think some of the competitors seem to go for the high commissions. But it's easy on and off, and just do one on and off, see how your money comes back, make sure it comes back into your bank account, see how that works. Then start looking at the macro type of stuff. We're going to talk about, I think next is just what influences Bitcoin cycles, crypto cycles, etc. It is a risk asset.
Yes.
We warn everybody to educate yourself. It is a high risk asset compared to bank deposits and those type of things. But it has certain patterns. And I think the longer you're in the game, it's like anything in life, you start recognizing the pattern. You realize, well, you've got your kindergarten years, you've got your school days, you've got your uni days. You know, when you stand back, you see these things for what they are. And it's the same with crypto. It's got certain specific cycles. So no one can call it correctly. I think the guy who reaches the top is just lucky. But broadly speaking, if you take a step back, some of them are identifiable.
So education is a crucial key in getting started. That's what you're saying, yes.
So education, and please, it's all free. It's just literally there. You know, we all got the power of the universe in our pockets these days. And with AI, it's even better packaged. You just need to ask the right questions, you know. So just instead of, I don't want to tell people what to do, but maybe do 15 minutes less TikTok and 15 minutes more Binance Academy.
More.
Ask yourself by the end of the day, what's the outcome? I mean, TikTok.
What's the outcome?
Yeah, what's the outcome? You know, you're building a skill set, and I believe, there's a personal belief of mine, I believe in small iterative efforts every day.
Every day. 15
minutes a day, Binance Academy. 15 minutes a day, your dedicated or your chosen crypto KOL on YouTube. 15 minutes a day, crypto Twitter, but please not the bad stuff, the good stuff, people who actually talk sense. And build yourself a platform or a process where you follow certain KOLs, but if you must test them as well from time to time. This guy says this coin is going to do this, never happened, okay. It's like having your own board of directors, your board of advisors, you know. Set up your own board of advisors around you saying, well, this guy knows what he's talking about, this guy knows what he's talking about. That one was okay at some stage, but he's now shilling a coin, so you fire it, you sound like Donald Trump, but you fire, you bring the next guy. But build your board of advisors. I think that's a very good human concept where we all need to have our own personal networks, and when it comes to all of these things, it's good to have knowledgeable people around you.
Yes.
And this is free. I mean, you don't need to pay them. They actually tell you because they want to tell you.
Yes.
Just always filter for personal bias. Some people, like one of the ones I follow is Invest Answers on YouTube. I think the guy's name is James. He says, I've made my money in life. I'm here to educate. And I've watched him for a while. I can't say that I sense he's promoting or incentivized to do a specific product, because that always gives you a bias, and then I stay away. So get yourself some good advisors. Guys, spend small incremental efforts every day. You know, if you learn something new every day for 7 days, that's 7 days of knowledge learned. And it doesn't need to be a big concept. It can be a small thing about Bitcoin. But think about 365 days of small incremental efforts. Even if it's just 5 minutes, it stacks up, you know. And over a year, you think differently, you speak differently, you sound different. People start looking at you differently. You know, it's small incremental efforts.
It's compound interest.
That's it. And that's why I'm saying incremental. So this thing and then that thing that bolts on this thing, that's compounded interest. Einstein said it's the most powerful force in the universe. So exactly that.
Can we have the chat more about what do you think about this Bitcoin? Because we saw Bitcoin rise up to all-time highs, and we're beginning to see it going below 100K, around Diner.
So what's driving that? I think a lot of it is liquidity. And I think lately it's become all liquidity. So let's take a small step back. I think, the first couple of halving cycles, the user base is very different for Bitcoin.
Yes.
What's different now is, and that used to be driven by the amount of Bitcoin that comes into the system. There's a famous pseudo-anonymous person on YouTube called Plan B. He's built what he calls a stock-to-flow model. He gets it from the gold market, where what comes into the system and what's the demand and supply otherwise. So not only new commodities or Bitcoin, but who's bidding on that, and how does a new entry of stock into an ecosystem impact price vis-a-vis supply and demand, vis-a-vis increased supply and demand, etc. And he shows you very, very clearly where the previous halving cycles was. But now that we're at a point where, I talk on a correction, but I think we're 18.5, 19 million Bitcoin. That's mine.
Yes.
And remember, it's a declining slope. So every time there's a halving cycle, less Bitcoin gets mined and less Bitcoin gets mined. So the supply is getting more and more scarce. Firstly. Secondly, a lot of people has lost the keys to the Bitcoin. You can never lose Bitcoin as a ledger entry, but you lose the keys to yours. So we estimate, and I have a couple of sources around this, why, let's say we rounded up, there's 19 million Bitcoin mined. I think only 15 million is publicly available. I think 4 million Bitcoin is gone forever. What? I don't know, one day we'll probably have quantum computing and maybe someone can hack that, but I think at this stage, only 15 million. So that supply is much less than we originally thought. And I think that's quite telling. I think a lot of people work on a 19 million when it's actually only 15 million. So back to your question. So I think there's been a very subtle shift, folks, where the previous halving cycles was all about Bitcoin supply going into the market and users coming into the market. And what someone like Rahul Paul says, and they've done a lot of study, I think he said he's got like 400 graphs of a macroeconomic framework on this. With the commencement of the US Bitcoin ETFs, there's been a subtle shift in the market. It's no longer the early faithful, the Bitcoin bros who's been there from the beginning. The institutions have now arrived.
Yes.
But what drives institutional demand is macro factors. And what drives that macro factors is basically liquidity. But now we need to look at what determines liquidity. Now, liquidity itself is just a function or a subset of US debt levels. This is why US debt levels is A, very important, but also B, very troubling. If you look at, in economics and banking specifically, there's something called the credit extension cycle that basically just gets money back, and the banks lend it out and it comes back, and the credit extension just builds. But basically how this works is that for the US government to inject liquidity into the system, they need to issue debt that the banks then buy from them, and then that liquidity goes into the market. Now, this is why there's so much noise in the system, is we've got a US shutdown now because, A, this is very political, but B, everybody in the US knows they've got too much debt. And I think that number, when I checked yesterday, was at $37 trillion. Now, folks, that is I say to you, we need to put that on in $100 bills. I wonder how close to the moon we'll get. It's a staggering amount of money, but that's not the important bit. The important bit is, of that 37 trillion, 10 trillion is redeemable this year, which means that debt needs to be repaid this year.
By this year?
By this, well, in a 12-month period, not this December, but within a 12-month period. So in a 12-month window. Now, that becomes a problem if and I say we, the US still have very high interest rates. So at some stage, if the interest rate don't come down, these guys will have to refinance that debt at high interest rates. So you pay more interest. That's a big issue. So then liquidity comes into the system anyway. So I think whichever way you look at it, whether it's at lower interest rates or high interest rates, liquidity will have to start coming into the market. This is why, and Donald Trump said this as part of his election manifestos, he wants a weaker dollar. I think a lot of the tariff stuff does a hell of a job of achieving that, but the dollar needs to be weaker in order for him to lower interest rates. And he knows him being the president, but the whole nation's got a problem. So that debt stack is just very, very high. So I think we got to a stage where the tariff noise died down a bit. It looks like the US and China found a level, and all of a sudden there was, I don't know what happened, what went wrong, but it's all part of the rare earths debate. And then he just said, no, 100% tariffs in China. And the Bitcoin market was or the crypto market was at a place where it was highly leveraged. And you drop a bomb like that and everything just explodes. And that's where the crash. And then you have a crash because then everybody deleverages, or the price comes down and there's a derivative cascade that just falls apart. So now on top of that we have a US government shutdown, and I don't know exactly how that works, but at some stage those unemployment numbers, because remember, if you're a certain US government employee, you don't have a job, you haven't had a job for I think a month now. That unemployment numbers, and this is something in South Africa we know well, but that unemployment numbers now need to hit the payroll the harder, because those folks are not getting paid. They all sit at home without a job, while the politicians decide whatever they want to do in life. So I think that's quite brutal. But that needs to hit the market. So I think when all of that stuff unwinds, I think we can expect to see a bit more bullish action. But I think that's why we're in the doldrums at the moment. There's a lot of quantitative tightening on the back of this, and I think that'll unwind hopefully towards year end, but also going into the new year.
So we're beginning to see that there's a shift now in terms of more of Bitcoin adoption. So Binance has Binance Pay. We are seeing institutions as well doing their own Bitcoin ETFs, their ledgers. Can you touch more on that?
So I think with institutional adoption, the key thing there is you now have unlocked a part of the market, especially in the US, where a lot of portfolio managers, asset managers, compile portfolios for people. And now they'll say, well, you know what, maybe put 5% in crypto because we've got ETFs. You don't need to put it in all the stuff we always told you is unsafe. You can now put it in a regulated ETF. So it's as safe as a gold ETF because BlackRock runs it, the SEC oversees it. So folks who never, can I say, had the courage for crypto now say, hang on, I may not understand it, but I understand the vehicle. I understand ETFs because I have gold and a gold ETF. I have an index ETF for the S&P. So I understand ETFs. Maybe let's put 5% in there. Now, you go and do the maths. I think that market is more than 100 trillion. So you put 5% in there, that's 5 trillion. Crypto market is at times just north of 1 trillion. So all of a sudden you have a 5x in the market. You have 5x more money that comes in. And so people say the next thing is, so is this really happening? Go and have a look at the Bitcoin, specifically BlackRock's IBIT. It's called the IBIT on, if you have a Bloomberg screen, you just go IBIT Go. That's the BlackRock ETF, Bitcoin ETF. And it's the fastest growing ETF in the history of ETFs. It's like, guys, I'm talking 5 times faster adoption than gold. Because gold was always, no one wants to have a stack of gold in your house because when people see it, but you have an ETF that's backed by gold, that's a very different story. And that's why ETFs are successful. This is why Bitcoin ETFs are successful. So the fastest adoption in terms of ETFs ever is after AI also the fastest tech adoption ever to get to 1 billion users. So it is definitely the technology of the future if you look at adoption numbers only. So where do we put ourselves? I think a lot of folks, like myself, still want to trade crypto myself. Binance has done a lot of work to make sure your crypto is safe. We are ISO certified in terms of our operational security, etc. So we've had one small hack, I think 3 years ago. If you look at some of the bigger hacks some of the other competitors have had, our security really works. And we've got something else we call the SAFU fund, SAFU, which is something the founder started, where he put at some stage 10% of all commissions into a fund. So if your account gets hacked or there's a liquidation that Binance can't honor you, we'll make you whole. And we just done that again now with this latest price drop. Public numbers, but we paid out almost $400 million. You think about it, it's almost 8 billion rands to users where, sorry, the algorithm didn't work, you lost money, we gave them that money back. As we should, I think. I think that's what we should be doing. So I think there's a role for everybody to play in this ecosystem, but I think adoption will keep going. We're tracking that Metcalfe's law curve. If you go, one of the articles we have on Binance Academy is on Metcalfe's law, but just also look generally, there's a lot of stuff, and you can even do an AI prompt saying, educate me on Metcalfe's law, specifically the parabolic nature of the curve. And all it means is basically adoption is slow, then it goes faster, and as the market matures, it goes slower again. It's a parabolic curve, and we're not even into that steep part of the curve yet. So we've got a long way to go.
Still at the beginning.
The guys always say it's still early. It's one day it won't be that early, and I always say to people, don't be the guy who's like your grandma. The only way you can speak to is because you had to give her a cell phone. That's the only way she can still speak to her grandkids, because you're the last person to adopt that technology.
Yes.
Don't be the guy whose grandkids give him a cell phone. Get a cell phone quickly. It's the same type of thing. And so yeah, I think it's still relatively early. South Africa is actually one of the countries that's adopted crypto ahead of that curve. So we've got a lot to be proud of, but it's still early. Still early.
You think that not only does it solve this issue, it also solves the issue whereby we have foreign workers who want to send money to Zimbabwe, to all of these things.
Yes.
Can you touch more on that? How is Binance improving its systems in terms of that?
So our system is available to everybody.
Yes.
But it's important, and for me, I don't know if we have international viewers, but it needs to be explained that in Africa,
yes,
there's large, what we call diasporas. There's people from Zimbabwe coming into South Africa. There's people from Malawi coming into South Africa. In Africa, you generally have two directions of travel. You've got north of the equator, people generally traveling towards Europe, and in the south of Africa, you're basically coming to South Africa. I think that's well established. But the one thing people miss, if people come from Zimbabwe to South Africa, value flow in the opposite direction, because everybody sends money home to their families. Now, I don't want to talk about the firms who do that, but I think some of the commissions are very high.
yes,
I understand what needs to be done in the background, but I think we need to take a moment and look at those systems critically and say, well, you want to send money back to Zimbabwe, for instance, you need to take rands, you need to change them into dollars, then you need to change them into whatever the currency is this week. Is it Zig, is it Zim dollar, is it just dollar, is it what is it, That's the one thing that needs to happen, and that's very expensive, because it all goes through New York. And Zim is still very much cash dollars. Now that needs to change, guys. It's just dirty pieces of paper going around all that. It's archaic. Now, you've got that on the one side, but on the other side, there's always two adoption curves. There's the retail adoption curve. Yes. Us folks here, we get into crypto, but there's also the merchant adoption curve. And this is where, with our partners at Money Badger and ourselves as Binance Pay, we've done well. We bring those merchants in. So all of a sudden, we've got 100,000 Zapper merchants. You start doing that merchant adoption curve, and the retail and the merchant adoption curve gets closer to each other. Now crypto, now money starts flowing. And this is just good economics. The more money flows around an economy, the better that economy grows. If you just hang on to all your money all day, you've got money, but no one else gets wealthy. So that money needs to flow, and people need to generate profits, and you need to do what you need to do to get money circulating. In economics, there's this terminology called the velocity of money. How quickly is that money getting around? Now with crypto, you can get that done via the merchant and the retail. It basically bounces between the two, if you think about it. The quicker that circle, that hamster wheel turns, the more profit the merchants make, the more profits the shareholders make, the more profits gets into the economy via dividends, etc. So we've still got a long way to go. I think what's missing in a place like Zimbabwe and other sub-Saharan African countries is merchant adoption. But it's happening. I think we've now proven, kudos to the guys, Money Badger have proven we can. If there's a solid, dependable QR code, you can make this happen.
Yes.
And what's good for these folks, if there's anybody in Zimbabwe listening to us, what's good is, remember crypto, we talked about it earlier. Crypto doesn't take 5 days to clear, it takes 5 minutes to clear, and that's long. So you can now pay your suppliers much faster. But you can also, please don't break exchange control regulations, but if you have an import-export undertaking, use your crypto to pay your suppliers faster. so they can ship more, you can sell more. This again, it's not only the velocity of money, it's the velocity of inventory. And now everybody starts making more money and more wealth gets generated. So I think in African terms that's important, because it's no use you send a family member in Zimbabwe crypto, that's easy. They need to spend it. And that's the difficult thing. And for them to spend it, you need the merchant adoption.
Yes.
So I think that's come a long way, but we've got a long way to go still. But we've now proven, there's proof of concept and it works. So we just need to keep pushing that stuff.
Yes, it really did work. Especially like the guys from Money Badger, because you can spend crypto almost anywhere nowadays. Because there's been this major issue there whereby you make all of this profit and you have to send the money back to your bank, all of the stuff. You get chunked again, some percentages on top of that.
Yeah.
That's been an issue as well.
That is. So again, custody, you need to have the ability to remit. For something to have value, you need to be able to remit it, you need to be able to spend it, you need to be able to invest it. And crypto ticks all those boxes. It's purely an adoption curve around it. And again, there's Metcalfe's law of networking. If you can get the merchants in Zimbabwe to form part of that network, guys, we've got something beautiful. Then in Africa, value, money, whatever you want to call it, starts going faster and faster and faster. And this is what the US does well, this is what China does very well, is the money just circulates much faster than it does in Africa. Because if you take 5% profit every time the money circulates, but it goes faster and faster and faster, that's 5%, again, to compound it into goes much higher. So, and that's the power of crypto. I mean, you just need to look at how crypto operates in Nigeria to see how this works really well. So, it's entirely possible.
Especially in bankland societies, because now you just have your phone and
don't underestimate, that's a very good point. Don't underestimate that, because we've got a high mobile penetration rate in Africa. People still think Africans don't have cell phones. No, we all have a cell phone.
Yes.
So the mobile penetration rate in South Africa is more than 100%, which means a lot of folks got more than one phone. I think only in the very poor countries is there still a mobile penetration rate of less than 70%, but basically everybody's got a phone. It's now a case of just unlocking, going from that, because remember Web 2 is mobile.
Yes, Web 2.
Just going from Web 2 to Web 3, which is crypto, which is Uber, which is that network laws and everything that operates with interest. And we just got to accelerate that stuff. Smart governments will facilitate that stuff, because again, the more money you circulate, the more tax gets generated. So for me, it's a no-brainer. Yeah.
So can you touch more on, before we cover everything, can you touch more on futures trading? Because it's an utterly different game from crypto and from traditional.
So futures trading as in derivatives trading.
Yes.
Yeah. So that's again something we offer, just on a regulatory basis. We do that via a juristic partnership with a company called 5 West OTC Desk, and that's worked really well. We've got the biggest derivatives derivatives platform in the world. Where this is different, so Binance doesn't make a market, so we don't take a Bitcoin, you can take a long position, I take a Bitcoin from your long position, I give it to the guy in the short position, he goes there, because in traditional finance that's what happens.
Yes.
We don't do that. What happens is, and the best analogy I've got, and everybody who knows me knows I use this analogy a lot, it's Tinder for derivatives. Because what does Tinder do? Tinder is a matching algorithm. You say, hey, I'm based in Cape Town, I like A, B, C, and D. You say, hey, I'm in Cape Town, I like A, B, C, and D. Hang on, two people like A, B, C, and D, match. And you get a match on Tinder. So it's basically a platform for that matching. That's what the matching algorithm in crypto spot and crypto derivatives do. We only set a framework for matching. You basically enter into a contract with that user directly. We just standardize the contract. So we, at no stage do we own the underlying or the paper itself. So I always say to people again, please, before you do this, go back to the Binance Academy, go read about derivatives. It is a high risk product because you can get yourself to very high levels. I would say take a low gearing, especially if you think you want to protect yourself, because remember, this is where derivative contracts partly came from. One was to deliver something what's the future? The future is the right to deliver something to another party at a future date at a specific price. let's say you're a cattle farmer from the Eastern Cape. You have a futures contract. You're going to deliver 10 cows at, what does a cow cost? $100.
I'd say 15,000 rand, around those prices.
Let's work on that. So 15,000 by December. You know, if I go to the market on the 15th of December, I'm going to get 15,000. That's what a future contract is. It's delivery of something for specific quality and quantity at a future date at a specific price. That's what it is. So what does that give you? It gives you certainty. You now know, okay, I can plan for my farm and I can do all these things, and you know, I can commit certain operational expenses and capital expenses because I know what I'm going to get. It's the same thing here, it protects you. So this also protects you. But you know, I've got a future for Binance for the BNB coin at 31st December at $1,300. Well, hey, I've got that in the pocket, the contract said. If you think the market's going to fall, and again, guys, please go to Binance Academy, go read up on how this works. But if you've got a long position, you think the market's going to fall, you can hedge yourself partly. So you just take the edge of that loss, you just take it off. So let's say crypto falls from, or a Bitcoin falls from 120 to 100,000. That's a $20,000 loss. If you got yourself covered, it's maybe just a $10,000 loss. So you can protect yourself. That's what the instrument's there for. It is a very complex instrument. When people win, I think it was Black Scholes, two gentlemen, Black and Scholes, who won the Nobel Prize for mathematics because they could work out how a future is, the price of a future is calculated. By the time someone wins a Nobel Prize, we're probably into deep maths territory, and I can't say I understand it, but just make sure you understand the basics of it, because there's a lot of variables in it. Just please don't gear yourself up to a point where you wipe yourself out in 5 minutes. It's there to protect you, not to gamble. So just use it responsibly.
Yes. Thank you so much for having you. So today we have touched on a very critical point, and it was a very insightful conversation. So thank you so much for having you, Mr.
Folks, it was only a pleasure.
Yes.
Thank you to
so
you and your
much.
team. It was great seeing you guys. And yeah, guys, let's keep building. Future's yours.
Yes.
Keep building, build responsibly, and we can make good things happen.
Definitely, Mr. Hannes.
Thank you very much.
Thank you so much.
Thanks, guys.
Okay.